Hello, judges. My name is Gavin. I'm a sophomore from Willow Canyon High School, and tonight I have the pleasure to present to you guys United Health Group, UNH. They are in the healthcare sector. My recommendation is buy. The current price is $290. The target price is $345 with a 16% upside. United Health Group is a leading healthcare company serving tens of millions of members with insurance coverages and medical services. And they also have three different operating divisions of their subsidiary, Optum, a health services company. But let's start off with United Healthcare. United Healthcare is UNH's insurance branch, providing Medicare, Medicaid, and employer-sponsored healthcare plans and serving tens of millions of members. United Healthcare accounts for approximately 74.5% of consolidated revenue for UNH. Now on to Optum. Optum Health is the care delivery and management branch of Optum. Optum Health is a known provider of primary care, specialty care, and home care. Optum Insight is the data analytics slash software branch of Optum. This operating segment provides healthcare, data analytics, um, revenue cycle management, as well as IT software platforms. Optum RX is the pharmacy benefit management branch of Optum. Essentially, they provide drug coverage plan designs and they manage prescription drug benefits for insurance companies, employers, and Medicare plans. And they earn most of their revenue from drug rebates. So, for my industry overview and competitive positioning analysis, I chose to analyze the healthcare industry as a whole, as well as the healthcare services industry to expand towards Optum, since Optum is in the healthcare services industry. The healthcare insurance industry has a compound annual growth rate from 2020 to 2025 of around 2.7%. On the other hand, the healthcare services industry has a compound annual growth rate of 5 to 8%. And some competitors of United Healthcare, which has a 16% market share in the insurance market, include CVS Health with a 12% market share and Humana with a 7% market share. So competitors of Optum Health include CVS Health. A competitor of Optum Insight is Epic Systems, and a competitor of Optum RX is CVS Caremark. I actually rate UNH a buy with a target price of $345. This recommendation was derived from the following key points. Number one, margin recovery. Amid recent margin compression concerns, UNH is projecting margins to recover in the near future, 2027 to be exact, and they're taking initiatives to do so, such as investing 1.5 billion annually in AI and exiting unprofitable counties. This will shed costs for them and ultimately drive back up their net margins, which have compressed over the past few years. Number two, current valuation. UNH is trading at a PE ratio of 17.78 times. This is lower than its 3 year median and its 5 year average PE. This suggests that the company may be considerably undervalued. Number three, wide moat. UNH has a wide economic moat due to their scaling efficiency, vertical integration model, and database advantages. And number four, attractive financial positioning. UNH is a strong generation of operating cash flow due to timing and structure of incoming cash. Um, and this includes premiums being paid upfront and claims being covered later. And this allows for the initiation of dividend payouts and share buybacks, contributing to investor returns. For my valuation and financial analysis, I chose to do a SOTP valuation as well as um, a general overview of some key metrics from their income statement, their balance sheet. I put in some per share data as well, um, as well as some their margins, their return on invested capital, return on assets, and some growth metrics, especially with capex. There, that one matters the most. So margins and ROIC have been compressed consistently over the years. So this uh, reflects how distressed the medical industry is. And 2026 SOTP valuation has led me to that share price of $345. It's also worth noting that revenue has been growing at a rapid pace with an annual compound annual growth rate of approximately 11.34% from 2022 to 2024. But margins have still compressed, which I've covered on multiple occasions. and profitabilities in distress. Now, for my investment risks, I would like to touch up on some government and policy risks, medical cost inflation, and PBM industry pressure. Uh, so UNH faces a major obstacle with CMS and government policy because um, the Center for Medicare Services um, largely controls their revenue. For instance, UNH's stock dropped 20% in a single trading day upon news of an underwhelming Medicare Advantage rate increase, which was 0.09 versus 5% expected increase. Now, moving on to medical cost inflation. Medical cost inflation has directly affected UNH's margins, causing considerable compression over the past 3 years, and is primarily caused by higher healthcare usage, increase in provider prices, and growth of specialty drugs. And PBM industry pressure are growing. It's there's threats growing constantly, and they directly affect one of UNH's best sources of revenue, Optum Rx. Now, for ESG considerations, um, UNH plans to have net zero emissions in their supply chain by 2050, and they have adopted an environmental health strategy in which they believe healthcare should be a way or a method of improving public health. Or, sorry, excuse me, environmental work is a method of improving public health. For social, they place an emphasis on access to healthcare and quality of care within operations. And for governance, they have a strong board of directors structure and experienced leadership. Now, for the effects of AI development, um, they could possibly integrate AI to lower medical costs. They could automate tasks for AI driven administrative efficiency. And they could also um, increase the quality of their care alongside the usage of advanced AI data analysis technology, possibly by directing patients to high performing providers based on data points. Thank you guys so much for listening.